Want to quit your job in 90 days? Learn this ICT strategy in 4 simple steps. Step 1. Mark out the 9:30 a.m. to 11 a.m. EST on the chart. This is the time period you will be trading this strategy on every Monday to Friday. Step 2. Identify your liquidity areas. On the 5-minute time frame, mark out your buy-side liquidity and sell-side liquidity swing points that occur before 9:30 a.m. EST. Now, for those of you who are wondering what those points are, they are basically where old highs and old lows are. These are where there is liquidity sitting around. Above the old highs, you have your buy-side liquidity, and below the old lows, you have your sell-side liquidity, both waiting to get taken out. Step 3. Look for a market structure shift. Once the price has swept either side of the liquidity, what you want to do here is drop down to the 1-minute time frame and look for a current swing point to be created. Once a 1-minute time frame swing point has formed, we wait patiently for a break of structure in the opposite direction of the liquidity sweep. This means that if the buy-side liquidity is swept, you want to look for a break of structure to the downside. If the sell-side liquidity is swept, you are looking for a break of structure to the upside. For the market structure shift to be valid, you want to see a body closure above or below the 1-minute swing point. Step 4. Search for a fair value gap. To do this, simply look for a fair value gap within the leg of price, which causes the market structure shift. If there is a fair value gap, you now have all the criterias for this strategy to work. So how do you execute this trade? Simply place your entry at the fair value gap with stop loss, covering the swing point of the market structure shift, and place your take profit at the next opposing liquidity that you have marked out earlier on. Now that you have understood all 4 steps, let's see how this ICT strategy works on the charts. Here we have a GBP USD chart on the 5-minute time frame. Here you can see before 9:30 a.m. EST, it created a low and a high which are pretty near each other. This is where we have our liquidity points. So when price here raided the 5-minute buy-side liquidity, I dropped to the 1-minute time frame and started to look for a market structure shift to the downside. Once the impulsive break of structure happens, the next step is to identify our fair value gap. Here you can see a tiny fair value gap has formed. So I place a sell limit at the fair value gap with stops above the 1-minute order block that caused the market structure shift and target the opposing liquidity. Let's see how it plays out. And after a while, we have smashed our TP